Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Can you kind of walk us back to, when you got started in real estate investing, and did you go directly into multifamily? Kind of just give us a little bit of basics about your background.
Yeah. So honestly, before you get started in real estate and thinking that you're going to go out and invest and create passive income, usually there's some event that happens to you, right? That causes you to realize that this is something important. And I had an event when I was pretty young, actually, and I didn't really think about it much until I got older and realized what was going on. But when I was 10 or so, my grandparents passed away. And my grandfather had been working for International Harvester. He was a mechanic there. They made farm equipment. And he worked his entire career there at International Harvester. And then when he retired, my grandma and my grandpa formed a partnership with their brother, and they bought a 120-unit apartment complex just outside of Chicago in a city called Aurora to the west of Chicago. And at that point, they actually started making, creating generational wealth, if to use that phrase. It was something that when they passed away, as a 10-year-old, I watched my parents discussing, well, what are we going to do with this? And how do we do all the estate taxes? And it actually was, a fair amount of work. But one thing that I realized is that my grandfather worked his entire life and he didn't create any real wealth until he retired and he bought a piece of property, an apartment complex. And that stuck with me for a long time. And real estate investing has been very heavily, you might say it's even in the blood on my mother's side of the family. There's been a lot of real estate investors over there. And so I started back in 2002, mainly with single family homes, and then grew into hard money lending. Actually, while we lived in France, I was a hard money lender over there to help support us because I was volunteering over there. So I did hard money loans and to fix and flippers and to rehabbers. And then 2008 came along. Everyone has their own story, right? So my rehabbers started avoiding my calls. I'd call them up, nothing, call them up, nothing. Got a hold of him. It took about a month to get a hold of him. And he said, "Hey, Daniel, you're not getting your money back." It's like, really? Okay. So what are we going to do about this? Are you going to deed me the property? And actually, to make it a little bit longer, he actually said, "No, I'm not. I'm going to drag you through the Florida court systems for the next year, which will cost you about 11 grand, or you could just pay me 11 grand and I'll sign it over to you." And so lesson number one in real estate is you got to know the people you're working with. You got to know not only what they're going to do in good times, because I had several good fix and flips with him and I was making good money as a hard money lender with him. But it was only when times got tough that you saw, what his character was really like. So that's an important lesson for anybody that wants to go into real estate is know your partners, know who they are, know their character, know how they think, and know there's someone you can trust in good times and in bad times. And so I got the house, I paid him, and kept it as a rental home for a while, and eventually sold it off once the market rebounded. And so then after that, I started thinking about multifamily syndication. I'd been listening to lots of podcasts like yours and other popular podcasts that are out there. And I was working full time at Intel at the time, just as I still am. And I decided, well, I could either go out and pay somebody, a coach to help me through the process, or I can go find somebody who's executing really well, someone who knows what they're doing, who's got a track record, and go invest with them and just watch the process. And that's what I did. So I went and invested with a group down in Texas, and it was the first syndication was a 56 unit down in Houston, Texas. and I put 75,000 into that, and got to see, all the legal paperwork. I was curious, but polite, and asked them a lot of questions, and eventually showed that I could add some value to them as well. I started doing services like calling around and finding appliances that were dinged or maybe sold on discount, pricing out different options for low water and native landscaping, things like that. And they saw I was interested in talking to them, and I was helping them. And so they eventually invited me to be a co-GP on a 122 unit. And that was in Houston also. And so we went through the whole syndication process and syndicated this 122 unit. I am on asset management calls to this day and talk to investors that I brought in. And it's a good asset. It's performing really well. We actually did a partial cash out refi at month 11. So I put $75,000 in at month 11. I was actually able to get $21,000 of that back. And then on my K1 forms, I ended up with $51,000 of depreciation. So, the distributions that I've been receiving are the tax benefits cover them very nicely. And that was my first experience with syndications. I've talked for a long time, so I'll let you.
That's great. And so now I was reading that you've been as a GP, you've done over 600 something units, and then LP another. So you're about 1,000 units you've been involved with.
Yeah, so the 635 units. We're actually closing on a 145 unit apartment complex July 29th. So then at that point, I will have that number.
Cool. That's awesome. So where are most of your properties? What states, cities?
Texas. Also, we are closing out a property. The property we're closing on is in Arkansas, Fort Smith.
Okay.
And Memphis, Tennessee.
Wow. Okay. Are you guys buying, C-class type properties right now? Or are you moving to B-class? What's your kind of take on the market? And then also with COVID, it seems like your rent collections are still pretty strong, but what have you seen with COVID? And then, going forward, what markets are you interested in?
Okay. So first of all, I think COVID, obviously nobody knows what's going to happen. And so everybody's asking the question, of course. And rent collections have been very strong. We've been getting, I believe our last number was 93% of our rent by the 10th. And that's fairly normal. So collections thus far have been strong. The markets that we invest in, for instance, Fort Smith, nationally right now, the joblessness is at 14%, and in Fort Smith it's at 4%, and so it's been able to retain its job numbers really well. So what I think is going to happen during COVID, I think that people that have positioned themselves in recession-resistant assets are going to do just fine. I'm interested in B and C class assets, not in A, not in D. So you don't want to be in the top rung, because the story is that people are going to be moving from A class down into B class. What I've actually seen, though, is that the people that tend to be in A class tend to have good jobs that they can telecommute from. So I personally haven't seen that move out of A class. But having said that, we do invest in B minus C class properties that are kind of in the middle of the spectrum, so that we can ebb and flow with the economy.
So is it Fort Smith in Arkansas?
Yeah, Fort Smith.
Is that like a military town? I don't know much about
it. It is actually. There's a fair amount of military there. There's a fair amount of healthcare and other things there as well.
So it's a balance. It's not like a one-hit wonder. I mean, okay. So the demographics in that apartment, the residents, is there a portion that are military, or what's kind of the ratio in there? Do you know?
So it's a spectrum. There are some military there. There are some healthcare workers. There's a lot of manufacturing jobs actually in the area. And those manufacturing jobs have still been pretty good. So it's a good diverse mixture of people.
That's good. So it's got a good mix and good economy. What I mean, why there? I mean, why that market? Is it what was it? Somebody on your one of the GPs that just kind of found it and just did the research, and was it you?
Yeah,
Who found it? Or, yeah.
yeah. No, I didn't find it. It was another member on the GP that found it, and he actually lives near the area, and that was one of the main reasons.
So on most of your properties, is it the same ownership group, the same GP, or do you have several different groups that you're working with?
I have different groups that I'm working with. So I joined the Think Multifamily group as kind of an umbrella organization, and all the syndications that we do are currently within that group. Not to say that will always be the case, but currently they are. So these are all people that we meet with on. There's about 120 people in the group. We meet with them on a regular basis, a couple times a month. And then, any properties that we're managing on, we're on calls all the time about those. So it's a small, close knit group of investors that tends to invest with each other.
And so your background is you're an electrical engineer, or
more on the software side. My degree is in computer and electrical engineering.
okay, electrical engineering. Yeah, I was reading that. So it's funny because a lot of my successful syndicator friends, they all have engineering backgrounds, and it just I've realized that those type of minds do really well in multifamily syndication because it's really numbers driven, right? And so you guys seem to do better, but just because you guys can look at the spreadsheets and you analyze things in a different way than a lot of other people. I think that's, I mean, Vinny Chopra, who I do some business with and is a friend of mine, he has an engineering background. Andrew Kuchman, I don't know if you know Andrew, he's an engineering type background, and just seems like everybody that I know has some sort of like engineering background that's done well in multifamily syndication. So I guess
I tend to think, first of all, it's cliche, but real estate is a team sport. I think that's one type of person that's on a lot of real estate, because the type of person that can speak naturally to others, the type of person who is very good with meticulously checklisting, going through your due diligence, going through your asset management and operations. I think there's a lot of different personality types that actually do really well. And that's one of the reasons why I like this, is because you need to bring together people that have different strengths.
I agree 100%. And I know my strengths aren't on the spreadsheet side, but I've been in sales my whole life, and I'm a really good marketer, and that's what I like to do, finding the off-market deals and so forth. And I work on the lending side, so like right now I'm using software and I'm just identifying owners that need to refinance, right? And it just, so I've actually realized I need to put systems in place. But the cool thing what I'm doing now is a lot of these people, the software kind of like they rate people, they rate the multifamily owners like on like their level of if they're willing to sell. So since I'm already talking to them, if they're not willing, if they don't want a loan, I'm going to say, well, do you want to sell your property, right? Because that's a natural progression. So it's pretty cool. But I love doing the marketing stuff, but I'm definitely on the prop. I started out as I've always been in lending since I was 20 years old. I was a residential mortgage broker, and then the recession of 2000, or whatever you want to call it, of 2007-8 hit. I owned a lot of real estate in the worst markets. Basically had a midlife crisis at 28 years old, moved back to California, didn't know what I could do. I didn't have a college education. I just kept doing what I knew was real estate and loans. So I'd sell houses and do loans. Then I got into hard money lending about 13 years ago and started lending money to these house flippers. And then I go, if these numbskulls can do it, I can do it. And I started flipping houses. And then I realized I don't like to flip houses. And then I said, well, there's got to be a better way. So I started doing some purchases in the Midwest and did some like burrs on small multifamily and single family homes in the Midwest, where you can buy stuff for like 30,000 and rent it out for $1,000. It's amazing, right? They're cash flow markets. And now, as I own a couple small multifamily, I realize I want to go, and I need to start with all my friend, a lot of my friends being multifamily investors, who's better to learn from, right? And also from the lending side, I look at properties all day long. So it's really about getting the confidence to start, stepping into that realm and finding the deals and so forth. So let's kind of talk about like where your strengths are in the business. Are you more the capital raising side and the deal and the underwriting side, or where do you kind of best what's your best skill set, and where do you like to work, and what aspect the most?
Yeah. So being as though I have a full-time job, I like to focus on the areas that are flexible in terms of their time. So, for instance, a lot of jobs such as broker relationships, you have to be on the phone during the day, during business hours, a lot of the time, and that can be difficult if you've got a full-time job. And so, I do a lot of types of jobs where, say, for instance, due diligence on the property. When you're looking at a property, you fly down, you meet everybody that's on the general partnership, you go through and do your due diligence. That you may take time off to do that, but that's possible while you have a full-time job. Investor relations are definitely possible. Everybody on the GP needs to build their investor network and find people that are interested in partnering with you. And that's something you can do, after hours. Or like me, I record podcasts during my lunch hour. So I keep my busy day filled. But I tend to work on those things that are more time flexible. So I do a fair amount of capital raising. I run the REI Club at Intel. So we've got a very nice group of people that are there. It's not just real estate syndication. A lot of it's focused on first-time home buying and first-time investor, single-family home investment. And so we've got a good mix of people that are there, but that's really about providing good service to the people that are there and building your network. So
have you had a lot of success bringing, I'm assuming most people at Intel are paid fairly well, probably are looking for passive income. So I think it's a natural. So have you, out of that group, are there a lot of people interested in getting into multifamily, or
I think there's a fair amount. I keep a strict separation in that we keep it only educational, and that it's side conversations that I have with people. So the group as a whole is education only. There's no sales pitch whatsoever. But I've talked just one-on-one with people that are interested in it, and I've talked a lot with people that are have things like. One person had a tenant that wasn't paying the bills just before COVID, and they needed to get connected to somebody that could help them out with that. He was very behind on his mortgage because the tenant wasn't paying. And so just finding real world situations like that and being connected to people is so incredible. It also keeps you really grounded because people are asking, some of the common questions are about short-term rentals, or how do I evaluate a loan for my house? And just really, solid questions that a lot of people who invest have. So I like having the diversity of conversation.
Yeah, that's great. Everybody out there really wants the same thing out of life, right? They want passive income, they want mailbox money, they want to be able to quit their job usually, but they won't quit their job. They just want to be able to, right, walk away. But a lot of people like their jobs, but it seems like you like what you do and you're passionate about it. So what are your plans? Like, are you, where do you see what markets do you study right now that you're interested in looking at? Are you interested in dabbling outside, or are you going to pretty much stay in Texas and Arkansas? Are there any other markets right now you like?
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
I like Kansas City quite a bit. And there are some other markets in the area that are doing very well. Louisville, Kentucky, and then some of the smaller tertiary markets around Kansas and Missouri as well, Independence. I like those. In general, the Midwest and the Sun Belt, there are various areas, especially in Texas, such as Dallas-Fort Worth, that are becoming, that are extremely competitive, and prices are going very high. Cap rates are diving. And the same is happening in Florida right now. There's a lot of people moving to Florida. Prices are going up. There's a lot of heated up competition going on. Although areas like Jacksonville are still at good rates, and you can find deals there. So number one thing that I do is I partner with somebody who is a boots on the ground person there. Like, for instance, our property in Memphis. The people that we partnered with also have 1,200 units there in that area. So they know what they're talking about. But in terms of where Alon Capital, my business, is going, I'm looking a lot more in the Kansas City and in the Midwest for cash flow type properties.
And those might be ones you take down yourself or with a joint venture partner, maybe not a full syndication?
Maybe. I like full syndications. Not to say that joint ventures aren't bad too, but for the larger properties, which is where I'm concentrating, full syndications scale better.
So going forward now, are you looking at more of like the 100+ units, since you've kind of grown your port base, and then it's systems of economy, right? And you can have on-site property management. I mean, it just
I'm not adverse to doing a smaller deal and JVing it with somebody. But I'm concentrating on one particular area right now, the 100+.
Right. And that, I mean, the majority of people that I talk to, they say the same thing. You have to, you have to get to 75 doors plus so you can have on-site property management. It makes sense, right? Because we don't want to get another job. But a lot of us that transition into, small, like fourplexes and small multi, then our natural thought process is like, I got to do a 15 unit. I can't do a 50 or 100 unit. But really, it's really just about building the team, because yes, you can. Yeah. And it's probably easier doing it with the team than doing it yourself, and there's less risk.
Yeah, I would definitely agree with that. And that's why, the team's got multiple personalities, people with different strengths. You bounce ideas off of them. I love investing with the team.
So just out of curiosity, part of what I do is I do some business development for a HUD lender, and I'm just wondering, have you ever looked into HUD financing, and do you know the benefits of HUD? Because a lot of multifamily syndicators, they don't, and I always try to educate everybody on it that I talk.
Let's do it. Give me the talk.
So you can obviously, if you're doing ground up construction, we have a product for that, but for acquisition, you can get up to 85% loan to cost.
Okay.
It's a 35-year fixed rate loan. It doesn't adjust. It's straight fixed rate. Right now, the rates are in the mid twos. It's got a 10-year prepayment penalty, no net worth liquidity requirements. There's a little bit additional fees in the beginning, but if you buy it, this is a perfect product for somebody who wants to hold long term. Mm-hmm. It's not a perfect product for a big value add. So if you're buying like a B+ property that doesn't need much CapEx, it'd be a good fit. Or what we do is bridge money to HUD, and then about 4 months ago they removed the policy where you usually had to wait 3 years to get into a HUD after a bridge loan, but they waived that now, so you can actually refinance into HUD. So I always say what we do is we like to compare side by side, so we give the multifamily investor like a full look at it, and you could see, like, I just sized one up. They were going to buy like a $24 million property in North Carolina. Mm-hmm. And they would have the difference in what they had to raise from a capital perspective, versus agency versus the HUD. It was like a $5 million difference. Mm-hmm. So also from a leverage standpoint, there are some downfalls that it's not always the perfect fit, but sometimes I always just encourage people like yourself to look at it from different aspects, because we can size it up and tell you if it's a good fit. From the syndication standpoint, they only allow for 2 distributions to your investors a year. And then there's a little bit more scrutiny on the life of the property. Like they'll do an engineering report and do what's the life expectancy of the roof and this and that. So you
Mhm.
have to hold for reserves. But it's really a tool that anybody I talk to, I say at least look at it and see if it makes sense for you. And sometimes it really does. And even with additional cost, the effective rate is way under agency debt.
Mhm.
So
Okay.
that's
I mean, I will. I'll put it on the list for next time I'm doing a syndication.
that's my sales pitch to you. Um, okay, so right now, what does your day look like then? Like an average day for you as like wearing 2 hats. I mean,
Yeah.
are you kind of like the workaholic type where you just
I'm
you wake?
definitely the workaholic type. No, they're busy right now. They are busy. I was in a face to face with my team at Intel today, and I was shocked to really appreciate how diverse the group was. We had, within the 12 people that we had there, we had more than 12 spoken languages, and so they're all around the country. And so my day usually starts pretty early. Most of us are in the U.S., but there's people all around the world. So we usually start our days off in the morning at around 7 a.m. and it's group meetings, and then I work at Intel until around noon. I usually then will go and record a podcast for the Win Multifamily Show, and then after that, I'm continuing my job at Intel. So then in the afternoons, usually about this time, this is perfect timing. We're recording at 5 o'clock here, which is ideal. And so then I get to start talking with investors, meeting people online, emailing, working like that. During the day, I do fire off emails to the people that I'm working with on syndications. So there is, some of that emailing going back and forth. But it's usually pretty busy during these lockdown times. I've actually really appreciated being able to have lunch, with the family at home, and just being able to kind of walk out of the office and, hey, I'm back. That's actually been really nice.
A lot of the people that are listening and a lot of our friends and investors, they're always. I have one buddy, and I just want to get your feedback. What do you like best if you were a newer investor underwriting multifamily
Mhm.
and wanted like the most basic but yet covers deal analyzer, Excel spreadsheet? Whose deal analyzer do you like to use? That's kind of the easiest and it's not going to overwhelm somebody.
Well, okay. So I definitely have got a opinion to give out here, and I'm trying to look up the person's name right now. I will give it to you for your show notes.
Mm-hmm.
But if people go to udemy.com, it's an online learning center.
Mm-hmm.
There are several walkthroughs of building your own model, and you can purchase them. The courses are $19.99. You can purchase them and just sit down and walk through and create your own model. I really recommend that for a lot of people, at least the numerically inclined. But in terms of other analyzers, I've seen quite a few of them, and some have strengths, some don't. It's hard to choose just one because they all operate a little bit differently. I'm using Think Multifamily's evaluator. It's actually by far the most comprehensive that I've seen of the common ones that are out there, because it allows you to run multiple different scenarios. I'll leave it there. Think multifamilies.
But that's cool. But you've also played around and built your own kind of system yourself.
Yeah, I really recommend people do that, because a multifamily, a lot of the sheets that you see out there are really complicated, and a basic one doesn't need to be. It doesn't need to be very complicated. A lot of it is. It'll take you a few hours to get through, but it's comprehensible if you just sit down and do it.
Who do you follow in the multifamily space that, like, if I were like the top 3 people that you kind of like look to for information and wisdom in multifamily?
Whitney Sewell,
Mhm.
Joe Fairless, obviously. I also like Hunter Thompson. And just for general overall real estate, I love listening to Jason Hartman.
Oh yeah,
He's
yeah,
a single family home
yeah, yeah,
investor,
yeah.
but
He's done so many single family homes in his career.
yeah,
It,
he's done so many podcasts too. I think he's around 1,500 podcasts at the moment.
what now in your real estate investing career? What do you think was your biggest learning lesson? If you kind of don't mind sharing something that didn't go the right way, or maybe it didn't go the right way and you fixed it, but you learned something valuable other than we talked about the hard money loan. Is there another learning lesson you've learned over the road that you could share some wisdom on?
Yeah, I would say that I've heard a lot of people that have honestly paid a lot of people a lot of money and got very little results out of it. And so I would say first of all, in terms of education, if you want to be educated in this, there's more than enough free or fairly inexpensive material. There's lots of podcasts, lots of books. If education is your focus, don't go out and spend a fortune. Now, if having the right network or connections is your focus, it may be worth your while to connect yourself up. Obviously, I've joined Think Multifamily. I believed it was worth my while to join Mark Kenny's group, and I have a great group of people there and good deal flow that comes through that I can then turn around and offer to my investors. So there's reasons to join and get coaching, and I would say to a lot of people that are getting started, there's more than enough good podcasts, great books out there, and then connect up with somebody who's doing it without spending a fortune. That would be my advice. And when you're ready to bring your game up to the next level, you might consider it, but you might not. You might, you might go into deals and JV and do just fine without it.
Yeah, that's great advice. I mean, there's a lot of people too. They'll get these courses. I mean, I've bought a lot of tools online, and then they just sit in my inbox, right? Like,
yeah.
But what's some of your since you're a developer, software developer, I'm curious on what are you using to leverage your time, or what tools out there do you like to use? Maybe not specifically just for real estate, but what apps, tools like do you use? Do you outsource any of your work with like even that you have your podcast? I'm curious.
Yeah.
Do you have
let's go through it. So I use virtual assistants.
Okay, good.
I will set up a system pipeline where, for instance, I need to have show notes written for my podcast. So I will record a podcast. I actually put together a quick template just so I can drop the pieces in line and get the intro and the outro and the sound effects going through it. That is time consuming. I'm still doing it. I haven't outsourced that yet, but I take that and I upload it, and I've got a channel where I have actually several people that have signed up to say they're interested in creating show notes. And the way this works is rather than just having one person that you're relying on, if you can say, hey, this is a channel which I'm going to be publishing work into, and then the first person who has the availability to do it claims the work, then you get a little bit of competition in your virtual assistants for doing the work. And so I tend to like virtual assistants both in the US and the Philippines, and providing incentive structures to work through that is really useful for being able to create good teamwork with them.
That's awesome. It's just funny you said that, because right now my whole that's like kind of my passion is to outsource everything, and the fact that I met this young gentleman. He's like 23 years old, and if you look at him, you're like, he just looks like a goofball kid,
Yeah.
And then you hear him talk and you're like blown away how smart this kid is. But he helps place virtual assistants for people, like where he vets them, and then he goes a step further and he coaches you on how to set up systems. Remember I told you I wasn't a systems guy. So now he's got me going into Asana and setting up these these workflows for for my VA. So I have one full-time VA and I have a part-time VA too.
Mm-hmm.
And it's just amazing. So going back to how I was telling you, I was using the software to find multifamily owners to see if they want to refinance their properties.
Mm-hmm.
So I've now outsourced that all to a VA doing that work, right? So I'm paying
Mm-hmm.
her $3 an hour, and obviously it's a numbers game, right? But
Mm-hmm.
the interesting thing is that I got a response back. I've been doing it for 2 weeks. Got a response back. The gentleman's got 512 doors that he wants to refinance in 2 separate properties.
Oh, nice.
That's like $30 million in loans. Now, granted, I might not end up closing it, but
Right.
it's like I'm paying somebody $3 an hour to create that opportunity, right?
Yeah.
So my mindset going forward is I am not a good systems person, but I have a guy that helps me create these systems. I go, Bill, this is what I want to do, and then he's like, okay, this is how we're going to do it, and then it's done, and then the VA can do their thing.
Mm-hmm.
But it's just that's really excites me right now is that that's how I think looking at how to effectively manage your time and like right now is where how are these multifamily investors getting deal flow? How could you actually instead of just work in the broker community, how can you find deals direct and how much where you can create seller finance opportunities and things like that? And that's kind of like my passion is that the marketing component and then bringing it into the real estate space. So that's what I'm working on a few apps and things. Yeah, so it's exciting.
It took me a while to get there in terms of being a systems person because I suffer from typical engineer-itis where I dive in and I do everything myself. And if I don't understand it all the way through, I'm not giving it to you, I'm doing it. And I did that for a long time and realized that I had to, give work to other people and it was worth my time to do that. And so honestly, what I started doing is I started tracking like how much time each task took and which one tended to bottleneck. There's always one task that like, writing show notes, you've recorded 10 episodes and now you need to sit down and write show notes for all of them. Well, find that task that's bottlenecking and then go outsource it. And that's just what I started doing. And once I had one task outsourced and I had walked through with a VA how to do that task and kind of got the flow going smoothly again, then I'd find the next task. And that's kind of how I proceeded with that.
I'm an engineer, so hard to give up. Yeah, that is. Yeah. It's true, but I do think that we all, as individuals, need to learn our strengths, right? Like, because we all have certain superpowers, and so that's what like I've been getting frustrated on a few things with myself personally, but I realize that you have to then kind of take a step back and go, okay, this is where I'm weak. This is where I need to partner. This is what I need to, because at the end of the day, I would like we all want to do the things that we like to do, right? Like if you could spend your time and whatever that is, everybody has certain things they like to do. They're like, I would want to spend my workday doing this and not doing this, right? So that's, and then you try to outsource that stuff, which is really amazing. And it's also amazing just on like using tools like LinkedIn. I connected with you and I connected with another gentleman the other day. I heard him on a podcast and I searched him in LinkedIn. I sent him a direct message. I said, and he's an outsource guru basically.
Mm-hmm.
And I heard him and everything he said on this podcast resonated with me. So I reached out to him and I'm going to get him on and I'll have to introduce you to him too, cause he's a whiz, but I'm going to get him on. But he's like, hey, I'm around this, and he gave me his cell phone number. I called him. It was like on a Sunday, and I said, man, I love your content, and I'm checking out your website. And he actually, I don't know the exact number, but he created a platform which is a great platform to go on where you can actually hire VAs.
Mm-hmm.
And the cool thing about them is you can just pay that you can pick somebody for like 10 hours to do like a week, and so you don't need to pay a part-time person $600. You could say, okay, 10 hours, you can do it anytime you want within the week. This is the task. And then they're all already vetted and stuff, and so it was pretty cool. But then he exited out of that. This is one of his startups, and now he has this other company where they actually he creates standard SOPs, standard operating procedures. for different things. Like, and so he's just amazing. So I'm like, I went and like talked to him. I said, okay, I'll buy your course. Spent $800 on his course the other day, but I'm happy I did, because then I could give it to Bill, and then Bill, we need to implement this, put it into it. So it's pretty cool, like the technology. And so going, like, we're running up on time, but what in the software development, what kind of, like, what do you work on? I'm just curious.
You mean at Intel?
Yeah, like
So I work on an Intel product called OpenVINO. It's computer vision, artificial intelligence, basically gathering analytics from video streams. So I focus on industrial equipment. So we do a lot of defect detection, making sure that safety zones are adhered to, security systems. But basically, I write software that will detect objects or people or actions within video.
Wow, and streaming video.
Day job, and I'm actually in the developer relations group, so I do a lot of teaching and training on the topic.
So like streaming video and like video conferencing and like video, like, I mean, that's such an emerging, I mean, that's like where everything is. I mean, aren't they like creating like office space that's like for virtual, like where you go in there and it's like a whole virtual world? So like eventually nobody's going to work at an office. I mean, to a certain extent.
That could be today. We're from what I've been told, we're going to be working from home at least till the end of the year. So it might come quicker than we think.
Okay, as we wind up here, what other asset classes, it doesn't have to be real estate, interest you to invest in out of curiosity? What do you in your mind, or if you're doing something other than real estate investing, but what interests you?
I love things that are recession resistant, and in particular, the reason why I got into real estate is because I can put together like an engineer, I can put together a 5-year cash flow, and I can see what I think this is going to do over the next 5 years. I can't do that with stock very easily. It goes up and down. It's based on market sentiment rather than the amount of income that it produces. And so I like mobile home parks. I think that's a great area. Like self-storage, another great area. Parking lots. I've heard of people syndicating parking lots. Those are really interesting because if you purchase a parking lot, you can actually triple net lease it out to an operator. So the operator will pay, for the taxes, the insurance, and the fee for the property, for using the property, the rent. And so for the person who owns the property, it's extremely low risk. Whether the operator makes the money or not, they're still paid a fixed amount. So that's an interesting business model too, parking lots.
Have you done any like ground up construction on single family or?
I've looked at them, but I have not developed the partner network that would make me feel comfortable going into a project like that. But I've definitely looked at the numbers. They're interesting. Ground up development tends to have slightly higher rate of returns. Their IRRs are higher. The hold periods are also longer, and the cash flow is lower in between. Oftentimes, you have to build the building before you can rent it out. So it might be a year or 2 or 3 before cash flow tends to come in. So it's interesting. You'll get an overall return that's better. The hold period is longer, but the cash flow won't be as good in the initial years. And so it's a different business model. And at a certain price per square foot, it makes sense to build from a ground up rather than renovating an existing building. But I do like it. I think we're starting to hit those price per square foot where it makes sense to look at them more.
And lastly, on your acquisitions, is there something, any sizzle features, or do you put in dog parks? I mean, what's your kind of like what's your
dog parks?
What's your signature to bump rents? I mean, what's your kind of take on doing a good job? Are you changing the name to villas? You're putting in security gates? Where do you see the kind of like little loopholes out there to
it's property dependent, to be honest. And I would not say that there's anything adding value to a property is more about looking at just what the property needs. And in terms of a signature thing, we're putting in a pergola on our current one. Our current one, a dog park. We're renovating the interiors. We are changing the name, actually, of this particular property that we're closing on. So it's a lot of standard things, and being able to execute well is where a lot of the difference is.
Do you see a lot of this? Do you see an opportunity in kind of like the C minus C product that maybe it's a little bit smaller, but that these multifamily investors kind of took on bridge loans, and now their bridge loans are due, and it's harder to get financing? Is there going to be maybe an opportunity there? I'm just wondering.
It's a good question.
I'm seeing like, where are the opportunities for? I mean, I think the smaller stuff for the newer investors, right, under 50 units, where it's a mom and pop, right, those are opportunities to get your feet wet, right, where you might even be able to negotiate seller financing. But also from the lending side, I'm seeing a little bit of, people that expected within 2 years they were going to, turn X amount of units, right, and they didn't, and now they're halfway done on a renovation and their loans expired and they need more capital infused. So, like, I have some like bridge financing, which I'll call hard money, where they'll go to 75% of the stabilized value. So actually, they'll fund if you get a good enough deal on a value add, they'll fund 100%. But they're expensive. They're 11% money plus points. But
yeah,
if you didn't have to bring in investors, it sometimes makes sense, right? Like I'm funding one right now for $1.2 million, and the guy didn't have the capital to come in with, didn't have the partners, and it works. But But I'm also thinking that the opportunity might happen because it seems like the real hit with COVID is on the C minus properties and the mom and pops, more or less. The B's and A's are fine. I mean, they're a little bit hit, but so maybe that's the opportunity that comes if people wanted it. Is those type of properties. Yeah.
Yeah, I think my comment would be that getting to know people that you can network with to find opportunities, because there are opportunities in all of those areas that you just mentioned, but it's just who finds it first and who gets their bid accepted. So it's a game of networking.
Yeah, no, very true. Well, this has been incredible. I really appreciate your time, Daniel.
Good to get to know you.
Good to get to know you, and we look forward to having you back. And I'll share this once it's edited, and I'm going to check out. Where can they check your where can they find your podcast?
So my podcast is at Alon Capital. That's AALON capital.com/podcasts. And very shortly, we're going to be rolling out a educational platform at winmultifamily.com. If you go there right now, there's actually a page up. It'll be down soon.
Sweet. Thank you so much. I really enjoyed it. It was fun. And I loved you answered all our questions. You're on it. You didn't even have to think about anything. Just came off. It was great. All right, guys, we're going to roll out of here.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.